Good afternoon and welcome to the Plant Healthcare PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. You can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just simply click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and will publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Jeff Tweedy, CEO, and Jeff Hovey, CFO. Good afternoon to you both.
Good afternoon, Paul.
Yep, good afternoon.
Thank you. We're excited to be here to report the 2022 earnings. I'm Jeff Tweedy, CEO, been with Plant Healthcare for over 5 years.
Jeff Hovey, CFO, been with the company about 10 years.
Good. Yep. It's just an overview. Plant Healthcare is a business. Thank you. Business focused on sustainable ag production, and we do this through our novel plant-protected biological products. The core of these products are really derived from natural occurring proteins. We like to think of them as vaccines for plants, and they deliver a healthy crop that can withstand stress, drought, and disease. We're really focused on key crops that include soybeans, coffee, sugarcane, and corn, and these really fit the change that's going on in the world today around climate impacts, the need for sustainable products, and really solutions to fit that. So this is just an overview of our operations. We have operations in the U.S., Mexico, South America, EMEA, South Africa, and soon to be Europe, in Uruguay, and India, which we'll talk about in a minute.
Over to me.
Over to you.
Thanks everyone for joining. 2022 was a great year for the company, and excuse me, I want to thank every Plant Healthcare team member for making it a great year. So let's dive into the numbers. Our revenue for 2022 was $11.8 million, which was 40% increase over 21. All of our regions were up with the exception of the EMEA region, which was held back by drought in the first half of 22, mainly in Spain, and to a lesser extent, the currency fluctuations with the euro versus the dollar. Looking at our regions, North America was up almost 75%. Due to increased sales into the specialty crop market in the Pacific Northwest, as well as into the corn market in the Midwest portion of the United States. Sales into our sugarcane market down in Brazil with our proprietary product H2 Copla was up almost 50%, mainly due to increased uptake from the sugarcane outgrowers. And we also launched Sayori, a full-scale launch of Sayori in 22, which generated around 800,000 sales. So if you look at H2 Copla as well as Sayori, the sales in Brazil were up almost 100% over 21. Finally, turning to Mexico. Mexico had a good year this year. It had a rebound from 21. They were up 14%, mainly due to increased sales into the specialty crop market there, which was impacted by the effects of the COVID pandemic, but they are seeing a rebound in that area. Turning to Harpen increased 36% to $8.2 million. Once again, North America, South America led the way. North America was up 74%, and South America was up around 50%. Looking at the 4-year compound annual growth rate with Harpen, we're at an impressive 31%. And every single region globally is experiencing double-digit growth. Turning to margin was up 2% to 61%. Once again, this was driven by Harpen sales into the Americas, as well as Sayori, which is an 80+ margin product. Further improvement in margin was affected by increased shipping costs, especially in the first half of 22. Due to the global supply chain issues that were experienced. Turning to cash operating expenses. Cash operating expenses increased 11% to $10.7 million. This is due to the planned increase in spend to launch the pre-tech products, as well as expand the commercial business. Should be noted that 22 cash operating expenses pretty much was in line with what we spent in the second half of 21, which is in line with what we planned associated with the fundraise that was in March of 21. The adjusted EBITDA decreased 24% to $3.5 million, which is mainly because of the improvement in our gross margin offset by increased operating expenses. And finally, the commercial business was up almost over 200% to $1.2 million. This is due to, once again, the gross margin increase of over $2 million, as well offset by some personnel costs that we incurred for the sales and marketing, mainly to grow the commercial business primarily in the Americas. So turning to the balance sheet, the company continues to be committed to working capital. It's been a project for us for almost 2 years now. I think we've made really good progress. As you can see, the working capital percentage of sales has decreased 20%, and the working capital overall has decreased 21%, which I'll talk about in the next slide. So looking at the balance sheet, our inventory balance increased $1.2 million to $3.4 million. That was due to second half purchases of inventory, primarily Harpen, to ensure that we had adequate supply for the strong first half 23 revenue that we're projecting. Considering the global supply chain issues that we had, I think with our good relationship with our tool manufacturers, as well as the inventory that we received in the second half, we're well positioned for supply to meet our 23 revenue targets. Looking at receivables decreased $1.8 million to $1.8 million. This is primarily due to higher than expected fourth quarter collections associated with the second half 22 sales. As I think I've mentioned in previous presentations, over the last couple of years, our revenue is typically weighted more towards the second half. About 40% of our revenue is in the first half of the year, whereas 60% was typically in the second half. This year, I'm happy to say that we made a concerted effort to more evenly spread the revenue. We were able to do that with 47% of the revenue being in the first half, with 53% being in the second half, and that's helped with some of our cash outflows. We continue to have strong working relations with our distributors, and we continue to be working towards lowering our day sales outstanding, which I'll talk about a little bit more in a minute. Our payables and accrued expenses were up $400,000 to $3.1 million, as we had a few one-time payments to a few of our suppliers. The borrowings is primarily the effect of IFRS 16. If you exclude the effect of IFRS 16, our debt is around $250,000. Our cash burn decreased a little over $500,000 to $3.5 million, and our ending cash at the end of 22 was $5.7. The company is confident that with our continued control of working capital and projected earnings over the next couple of years, we will deliver cash break even, become profitable, and continue to fund growth within our existing resources. Finally, looking at working capital and cash used in operations. Cash used in operations decreased $500,000 to $2.7, primarily due to the effects of the lowering of the EBITDA. It should be noted that the second half cash burn was significantly lower, about $2 million lower than the first half, mainly because of what I mentioned earlier with the collections in the fourth quarter. Our working capital improved 21% to $3.1 million, as this was mainly because of our lowering of our trade receivables, slight increase in our trade payables, and then the increased spend in inventory which I talked about earlier. We're continuing to lower our payment terms with all of our distributors. We've made good progress in the EMEA and South America. We do have a factoring relationship in Brazil to help with any cash issues we have. And then we are working as well in 2023 with our suppliers and vendors to extend our payment terms with them, which has already started to bear fruit. And finally, working capital percentage of sales has seen a steady decrease over the last couple of years. In 2020, it was around 80%. With the results of 2022, it's just under 30%. So we expect to maintain this level by continuing to manage our working capital, as this is a key KPI for the company.
Thanks, Jeff. So let's turn to the business model. We've done this a little different than we've looked at it in the past. And first of all, we want to talk about the market that we're in. The biological market is really broken into two segments: biocontrols, which is the chart on the left, and biostimulants, which is the chart on the right. Biocontrols, you have products that are registered through either federal or states within each of the different countries. Biostimulants are more like type fertilizers. Both these markets are growing significantly, double-digit growth projected over the next couple of years. And the big drivers for that are climate change, food security, and just the demand from consumers and from government regulators for more sustainable products. We have products that play in both, and so we're excited that we're in markets that are growing rapidly, and given our results the last 2 years, we're outpacing the market, which is our goal. So just getting into our technology, think about plant healthcare in two forms, or two buckets. We have Harpin, which is a product that's been around for a number of years. It's a proven technology, very environmentally friendly, makes the plants healthier, resists disease. And the result of that for growers is a higher return on investment. We see significant yield increases in sugarcane and corn, and our growth has been around 31% the last couple of years. The new technology, which we call Pre-Tech, or vaccines for plants, is our next generation. Our first product was launched in 2021 with significant sales this past year. We did just under $1 million in Brazil. And now we have additional launches, registrations submitted and launches planned, which we'll touch on in a bit. We want to expand the Saori product, or the PHC 279, into sugarcane and coffee. We've just submitted 949 for registration in Brazil for soybean nematode control. And we have a pipeline of other products, PHC 404 and 414, coming in the future. So I'm going to spend just a minute on PHC 949. Nematodes are a significant problem that we've seen in a lot of crops across the globe. It is estimated that nematodes cause damage of $157 billion of loss of crops each year. It is a microscopic worm that feeds on the plants, reducing the yield, but also it also allows bacteria and other pathogens to enter the plant, which further reduces these crop yields. It is a large market, about $1.36 billion of products used today. And there are a number of products that have been taken off the market, so growers have less choices today and will continue to have less choices because these products are highly toxic. So that really opens up an opportunity for us. 949 is a fantastic nematicide. We've been testing it for 3 years now with excellent results, and not only specialty crops, but also row crops. It works by stimulating the plant to generate a natural substance which inhibits hatching of eggs, but also feeding of nematodes. We use this product in fruits and vegetables, but also is applied as a seed treatment to row crops. It can go on foliar on all crops. We expect to launch this product through Wilbur Ellis in the third quarter of 2024, and we expect approval in Brazil in the first quarter of 2024, with negotiations underway with potential partners. We do have a comment from a kind of a testimonial on the right from a researcher who's used this in the past, and she's very excited about this product. She works in central Brazil, where a lot of soybeans are grown, and has seen excellent results with this product for control of nematodes. So this will be the next new product coming that you'll see in the coming years. So just a bit on our global distribution. We've shown this in the past. I'm happy to say we continue to add to it. We've got strong partners in the U.S. like Wilbur Ellis, Nutrien in Brazil and Copacabana, Brazil, Agri in the UK. We added Agar this past year in Argentina and eventually Uruguay. And in January, we just announced a new long-term agreement for into the Indian market for sugarcane with Novozymes, a significant player in the Indian market. And what's good about Novozymes is they have established relationships in sugarcane today with processors, so they're a well-known entity and expands our footprint. What's really important about these distributors is two things. Number one, we have visibility into their sales and inventory, helps us manage working capital, but also we see reoccurring sales year on year with these large distributors. So as they expand, they build on the use each year with current growers and expand to new growers. So we want to spend a little bit of time on the geographic breakdown and how do we get to the 30 million? What crops are we focused in today, and where are we focusing our growth opportunities? We spent a fair amount of time on this during the fall, really looking at our 5-year plan. And with North America, as Jeff said, sales were up 74%. We've had tremendous growth there, really focused in corn, citrus, fruits and vegetables, tree crops. We want to expand into cotton and soybeans in the coming year. All sales today are with Harpen. We do expect that we'll get the 279 registration in the first quarter. There's a question on that later. I'll touch on that. And then we want to expand with 949. We believe 279 has got significant advantages in the specialty crop market, and potentially for a new disease that's coming into corn called tar spot. There was some evaluation this past year that looked very promising, and so we'll increase those efforts this year. And 949, as I mentioned earlier, I'm very excited about it. We think it's a significant opportunity with nematodes not only in the specialty crops, but also row crops in North America. In South America, we've done a very good job of expanding our presence there. So Brazil, Argentina, and Chile. We're expecting Uruguay sometime this year. We really focus on the Harpen and sugarcane, and then the launch of soy. As Jeff mentioned earlier, sales were up over 100% year over year, so significant growth. We would like to get into coffee eventually, and we've submitted registrations for 279 into coffee and sugarcane for disease control. And we expect 949, as I mentioned earlier, a registration sometime in the first quarter of 2024. Significant opportunity on soybeans. Once we get soybeans registered, then we will add additional crops. Cotton and corn would be the next targets. Turning to EMEA, we had a challenging year in EMEA just because of drought that we saw in Spain and Portugal, and then some reduction in total revenue just due to currency. But overall, I think the team had a decent year. We continue to focus on potatoes, citrus, rice, and glasshouse crops with Harpen. We had exciting news in the fall where Harpen was now registered in France, which will open up the entire EU market. So we're working on those expansion geographies in the future once we achieve registration. And then, as I mentioned earlier, India. We expect registration sometime in Q4 this year with our partner Novozymes. and they had great results this past year. We're expecting significant growth from the Indian market in 2024 and beyond. We have very good distribution partners in Agri who support us in the UK and also in other parts of Europe once we achieve registration. And Novozymes will be a significant partner for us moving forward. And then lastly, Mexico. 2021 was a very difficult year in Mexico due to recovery from COVID. I'm happy to report that Mexico had significant growth in 22. This is really with Harpin and in our third-party products into the specialty product crops like tomatoes, peppers, berries, cucumbers. We also entered the market of avocado and agave, and we expect significant growth this year. And we began testing Harpin on sugarcane in Mexico this past year and expect first-year sales this year with Harpin. In addition to that, we will be submitting a registration later this year for 279 and 949. So we'll be expanding those two products into Mexico. These will be the first registrations for new technology into Mexico in a number of years. We're very excited because of the fit that we see in specialty crops for both of those. So Mexico has done a very good job. It's a very important market for us, and it's good to see that we're making the investments to continue to grow that business in the future. So in summary, we play in the sustainability sector. It's growing about 16%. It's really driven around climate change and the need for products to really fit the growing demands around climate change. We've made significant investments in pre-tech, the vaccines for plants over a couple of years. As we've said in the past, we're targeting 30 million of revenue growth by 2025. And these different regions, these are our targets. So when we focus our people and our internal resources, those are the regions and the target crops and the products that we're going after. There's significant large markets, and we've got a very large presence with our distributors like a Nutrien, Wilbur Ellis, and an Agri. So why invest? We have products that fit this climate change sustainability, and we've proven those. We have market access that others don't have, and will continue to deliver the broad market access. We have a low cost of goods. Jeff mentioned our gross margin, but the team continues to work on lowering the cost of goods of our products. So we're a first product out of the gate, 81% gross margin. That's very good for a first-year product. We had a strong launch, and we expect that to continue this coming year. We have major launches planned every year. 2021 was a good year. 2022 is better, 40% growth. We're very excited about that, strong growth for the business, and Harpin was up 36. So the team continues to find new markets, work with distributor partners on access to these markets, and it's been a lot of fun to watch the growth and expand on each of the regions. As Jeff mentioned, working capital is a critical focus for us. We will continue to make improvements there. We want best in class in working capital moving forward. 2023 is off to a good start. We feel good about it. And as Jeff said, we will reach cash positive within our existing reserves. So 40% growth, really driven by strong demand. We have a great team, great partners. Paul, turn it back to you.
Fantastic. Thank you indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. Just while the team take a few moments to review those questions submitted today already, I'd like to remind you that recording the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. We've had a number of questions, both pre-submitted and throughout today's presentation. So perhaps, Jeff, I could just hand back to you, and where appropriate to do so, you could read those out and give your responses. That's great. Thank you.
Sure. Yes, the first question was a question regarding our PHC 279 and regulatory approval with U.S. and the revised date for when the registration will be approved. Why is a delay in this approval? Good question. It's highly frustrating for us. The delay is due to the backlog within EPA. EPA has about 7,000 registration backlog. This is due to two issues. Results of COVID, kind of a post-COVID world. EPA is still working from home. They don't work in the office, haven't for almost 3 years. And second of all, it's a resource issue. They don't have enough people. I think there was a new PREA legislation that went through, so there will be more funding that will go to EPA to hire people. But it's a frustration that's going through the industry. Our indication is that we'll have it by the end of Q1 this year, and we have plans underway with our partner Wilbur Ellis to begin pre-launch activities and bring to the market this year. Second question was related to board appointments. We had Kate Coppinger join the board, as well as James Eco-Lightly. Similarly, what does it change the focus of growth, or does it change the focus of growth from the business away from organic? And the answer is we added two members to the board. Richard Webb stepped down in June. We began a search, and we quite frankly found two very highly qualified individuals. James had been on the board in the past. I think stepped down in 2015 or 16. So he's got experience, but it's a much different company than when he was on before. And Kate is not from the industry at all. She comes from the oil and gas. However, she does come from a regulated industry, which is good. So they bring a much different perspective. We have not changed our focus on organic growth. And in fact, we just had our first board meeting, and they bring a really refreshing, different view, different questions. So I think it's a good addition to the board, and we will continue to focus on the business and grow. Next question was related to social media. Social media occasionally alludes to how Harpen can boost quantity of feedstock and biofuels. I'm sure this is true. Does PHC have any formal agreements with biofuel producers? The answer to that is no. We do not. We do work with a number of the biofuel producers. We call them the processors in Brazil today. They've done some testing, and we've hired individuals to help us from a consultant standpoint to work with them. So there is some testing that's going on and working with them. But as far as a formal agreements, there are no formal agreements with them. Next question is, I doubt your laboratory in Seattle is idle. What are you working on? That's a great question. We have a tremendous team, a very young team in Seattle. We've added a number of positions the last couple of years, and we've been really focused on a couple of areas. Number one, bringing the manufacturing of 279 and 949 from a lab scale to a full scale manufacturing. That would be the first focus. Second focus is to make sure that when we bring these forward, they are delivering the cost of goods targets. So as we've mentioned before, if it doesn't have a certain cost of goods, we will not bring those products to market. Thirdly, and what the focus will be this year is further refinement of those cost of goods. How do we get them down further? And then lastly, as I mentioned, we have two other peptides in the pipeline, 404, 414. We need to begin the scale up of those products and also the testing in the market. So there will be some focus on that. So it is a very busy group, and we're excited to keep them busy. Next question is, currently PHC products are made somewhere in Europe. Wouldn't it make sense to have a secondary producer in the Americas?
It's a good question. Good question. Just a reminder, for years we had our supply of Harpen was made in China. Beginning in 2023, we actually moved the production to a European supplier, which helped us with a couple different items. One, it's going to lower our cost of goods by anywhere from 15 to 20% per kilogram, but it also is helping with our logistics We are able to ship the product anywhere in the world from our European manufacturer. We have looked at bringing the production of Harpen into the Americas. We just found it too costly. However, we are currently in the process of finding a second producer in the event that there's an issue with the first producer. But that's early stages. We probably won't see any real movement on that probably till the second half, maybe even the fourth quarter of this year.
Okay. There's a question here. Congratulations on the very good results. Can you say more about the origin of growth of new customers or current customers ordering more? Yeah, I mean, I think you see both. I mean, obviously, Nutrien is a new customer for us. They've had a very good year. They treated all the seed with the soy that was sold. But with a customer like Wilbur Ellis, we've had great expansion. 2022 was a great year with them. They've been a customer since 2019. And I think it really speaks to what I mentioned earlier, the reoccurring sales. So we have partners that are really good about generating that reoccurring sale every year. With the current production capacity, is it possible to reach 30 million revenue by 2025 or more investments in facilities required? That's your question. It was a question related to production capacity. Do we have enough production capacity?
Oh, absolutely, yes. With the movement to the European supplier, it's not a problem at all. We have monthly calls with that producer manufacturer to ensure that there's adequate supply. There's been no problem. We've actually done the first shipment of Harpen will be in this month or maybe the beginning of next month to Europe to help with our Spanish business. But no, there's no issues with any capacity for the next couple of years.
Yep. Next question here is related to PHC 414 and 404. Can you provide any further details? I've not heard these references before. That's for good reason, because we've been focused. Our focus has been on 279 and 949. Now that we've kind of cleared the decks with those registration submissions, now we're on to the next peptides. These are what we would call more on the biostimulant side. So increased yield, really help with stress. We've done some work in the past on yield increase in especially corn under drought conditions. It's very early stages, but these would be the next peptides that we'll be testing and potentially bringing to the market once the cost of goods hurdles are met. Okay, question here. Who owns the IP and who supplies the base products and long-term contracts? So the IP is owned by Plant Healthcare. I think we've had, with Pretech now, we've issued over 15 global patents. We have over 50 submissions still pending. So we own all the IP, and it's very broad IP, which is good. On the contract for production, we contract out the manufacturing. We believe that it is not a wise spend of investors' money to invest in capital expenses when there's a number of companies out there who do this very well, contract manufacturer. So we contract that out, and we have long-term agreements with those manufacturers. Okay, next question. Could you walk us through the soy sales cycle? My understanding that all of these sales are for crop have been made by December 31. What would be the balance sheet impact, receivables that you've collected? Do you anticipate sales to, I assume that's multiply second year? I've forgotten what it's called. So typically, the way that the sales cycle works in Brazil is planting will start probably September, October, and go through January, depending on the region. So if you back that up, they have to start treating their seed in July to have it ready for those sales. So it takes a couple of months for them to get it done. Typically, our sales to Nutrien would be in the second quarter. So we would sell to them sometime in the second quarter. We'll do that's when it was sold last year. That's when it'll be sold this year, and then that product would be shipped to Brazil, and then they would begin treating sometime in the end of second quarter into early third quarter. It's kind of the selling cycle.
And payment terms associated with soy is around 60 days, and we've had no issues with payment so far.
I can't see the questions. One of the key attractants to your product is significant return on investment for growers, for investors, dream the product, sells itself. To what extent do you feel that PHC products benefit from a word-of-mouth propagation from farmers? I believe it's a huge deal. I think farmers are like any other business. You have early adopters, and you have some that watch and don't adopt early. So they see what the early adopters buy first, and then that's when they get on board. So I think it is important. How you deliver that is different by country. The use of social media in Brazil and Europe is a tool that's used to spread information, and growers pick up from that. The U.S. not so much. It's more of your retailer, so that's why a relationship with a Wilbur Ellis, as an example, is so important. They have a number of retail outlets, and their recommendations from their people to the grower are really important. And so it varies by market, but early adopters is very important for adoption of new technology. Next question, is there an opportunity to partner with Novozymes for other products or other countries? Sure. I think there's other countries that could be of interest. I also believe that there could be some interesting discussions around manufacturing as well. Novozymes has quite a bit of fermentation capability. Where they lack is the drying capability, but there could be some other opportunities that we are exploring with Novozymes. They're a very good partner and been good to work with so far.
I think that's it.
I love this question. Have either of you met a farmer face to face in Latin America, and what do they tell you? Yes, and in fact, I'm leaving tomorrow evening to head to Brazil for I think a couple of weeks. So I have not met many soybean growers. Most of my focus has been in sugarcane. The growers I've met are fantastic. They love to drive you around their farm and show you the proud of their farms, and their operations and the crop that they grow. And it's good to see the results. And I'm looking forward to it in the soybeans as well. We're going to go see one of the largest soybean growers in the world. And so I'm excited to meet the growers in Brazil, soybean growers in Brazil, and talk to them about new technology. Growers love new technology. They're always trying something new for higher, better yields. And biologicals in Brazil is one of the fastest growing markets. They really work to adapt it to their market and are willing to try it.
I think that's it.
I think with that, Paul, turn it back to you.
That's fantastic. Thank you indeed for covering off those questions. Of course, any further questions that come through, the team will review those, and we'll publish responses where appropriate to do so on the Investor Meet Company platform. Jeff, perhaps before redirecting investors to provide you with their feedback, which I know is particularly important to you and the team, if I could just ask you just for some closing comments, please.
Thank you, Paul. I mean, I would say 2022 was just a fantastic year for us, 40% growth, building off a strong 2021. We said when we did the fundraise in March of 21, we said what we were going to invest in. We said what we delivered. We overachieved what the estimates were. That was the trading statement that we did in November. So we've got strong partnerships. We continue to build on strong distribution, which really separates us from a lot of competitors in this space. We have market access that they don't have. We have high margin products. And 23 is off to a great start. It's early, but it's off to a great start. And we expect another great year. Appreciate the support of investors, and look forward to talking to you at the half about another great half.
That's fantastic. Thank you both for updating investors today. Can I please ask investors not to close the session, as this will automatically redirect you to provide your feedback, and all the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of Plant Healthcare PLC, we'd like to thank you for attending today's presentation. That concludes today's session, and good afternoon to you all.